All right, welcome back for another deep dive.
Always fun.
Today,
Yeah.
we're going to be looking at scalping,
Okay.
which is
Interesting.
this like super intense trading strategy where people are basically trying to make a profit off of these tiny, tiny little price changes.
Really small.
And we have this article
Oh, cool.
from IG International
Okay.
called 4 Simple Scalping Trading Strategies.
Gadgey.
I'm a little skeptical,
I could see that.
honestly, about the simple part,
Yeah,
but we'll see.
it's kind of counterintuitive, right? Like most people are looking for the big moves, those sweeping market moves.
Oh, yeah.
But scalpers
Yeah.
are all about, those small price fluctuations, like
Yeah.
almost invisible,
Yeah, they happen so fast.
blink of an eye.
You can't even see them.
Different mindset.
Totally.
Yeah.
So
Mm-hmm.
before we jump into these supposed simple strategies, let's just break down like what is scalping actually?
Yeah, for sure.
Sure.
Lay the groundwork.
Core principles.
Yeah. Yeah. So the article describes it as a strategy designed to profit from small price changes.
Okay.
And I think that's a good place to start.
Yeah.
But it's more than just that, right?
Okay.
It's about making a large number of very small profits.
Okay.
Like we're talking a few pips or sometimes even fractions of a pip on each trade.
Fractions of a pip.
Yeah.
So they must be making a ton of trades to even see any kind of
Huge volume.
real return.
Exactly. Yeah. Scalping is all about
Yeah.
volume and speed.
Okay.
So you're basically playing a numbers game,
Okay.
which means, you absolutely have to have a strict trading system
Mhm.
and the discipline to stick to it no matter what.
So no room for emotion in scalping.
Not really,
Oh,
no.
right.
Emotions can...
Okay.
One bad trade can easily wipe out the profits from a whole bunch of winning ones.
Right.
And it's so fast-paced, you don't have time to second-guess yourself.
Yeah.
You need to be decisive and execute your trades with precision.
Okay.
The article really emphasizes this,
Yeah.
Like, you can't let winners run.
Mm-hmm.
Take your profits quickly,
Yeah.
move on to the next opportunity.
Got it.
Yeah.
Okay. So let's dive into some of these strategies.
All right.
The first one they mention is using the stochastic oscillator.
Okay.
I'll be honest, that sounds
It's a mouthful.
pretty intimidating.
Might sound complex, but
Yeah.
the idea behind it's actually pretty straightforward.
Okay.
So the stochastic oscillator,
Yeah.
it's basically an indicator that compares a security's closing price to its price range over a certain period.
Okay.
And this helps identify potential turning points,
Okay.
which is crucial for scalpers,
Right.
They're trying to get in and out of trades quickly.
Yeah. So it's not just about like
Right.
spotting an uptrend or a downtrend. It's about like pinpointing those moments where the momentum might be shifting.
Yeah,
So
exactly.
you can capitalize on that.
You got it. And the time frame's important here.
Okay.
So the article uses a 3-minute chart of Brent crude oil as an example.
Okay.
And they point out how, the lows in the stochastic oscillator actually provided entry points for long trades,
Oh, interesting.
buying the dip, essentially,
Yeah. Okay.
while the highs signaled an exit point.
Interesting. So you're essentially riding the wave of that upward trend,
Hmm.
buying when the oscillator dips and selling when it peaks.
Exactly.
But wouldn't that mean like you could get caught out if the trend suddenly reverses?
That's the risk with any strategy, right?
Yeah.
But the article does address how to handle downward trends as well.
Okay.
So in that case, you'd be looking for short selling opportunities when the oscillator gives a bearish signal.
Okay.
It's all about adapting to the market conditions.
So it's not just about blindly following the oscillator. You need to have a sense of the overall trend
Right.
and use the indicator to like fine tune your entries and exits.
Exactly. Think of the oscillator as a tool that gives you a more precise entry or exit point
Okay.
within the broader context of the trend.
Okay, that makes sense.
Yeah.
So the article also talks about using moving averages as a scalping strategy.
Oh, yeah, for sure.
Can you
Another good one.
break that down for me?
Sure. So this strategy uses a combination of
Okay.
short-term and long-term moving averages.
Okay.
So, for example, they might use like a 5-period and a 20-period moving average to signal entry and exit points, while using a longer-term moving average, like a 200-period, to gauge the overall trend direction.
Okay, so you're looking for those crossovers
Right.
between those short-term moving averages,
Yes,
those
okay.
potential trading signals.
Uh-huh.
But you always want to make sure you're like aligned with the direction of that longer-term moving average.
Precisely, yeah. And they illustrate this with a 3-minute URSD chart
Okay.
showing how these crossovers, in the context of that longer-term trend, can create trading opportunities.
Okay.
But it's important to remember that no indicator is foolproof.
Right. It's all about interpreting those signals in the context of the market, not just blindly following every crossover.
Yeah, you got to use your brain.
Exactly.
A little bit, at least.
So,
and this is where risk management becomes even more crucial, right?
Right.
Scalpers need to be very disciplined with their stop-loss orders.
Because even though the potential profits per trade are small, those losses can add up very quickly if you're not
big time
careful.
Absolutely.
Okay, now the article also mentions a strategy using something called the parabolic SAR.
Oh, yeah.
I have no idea what that is.
Okay.
Can you demystify it?
Sure. So SAR stands for stop and reversal. And it's a trend-following indicator that helps visualize potential trend reversals and suggest entry and exit points.
Okay.
It's represented as a series of dots plotted above or below the price bars on a chart.
So you're essentially following the dots, entering trades when they signal a new trend.
Yeah,
and exiting when they indicate a potential reversal.
Yeah, like a trail of breadcrumbs.
Yeah.
But instead of leading you along a path, it's telling you when to jump on or off the trend.
Okay.
I like that.
Yeah.
A dot below the price is bullish.
Okay.
Suggesting a potential long trade, while a dot above the price is bearish.
Yeah.
Indicating a potential short trade.
Makes sense. So how do you actually, apply this in practice?
So the article uses the DAX index on a 5-minute chart to illustrate this. And they show how the parabolic SAR can help you ride trends for extended periods.
Okay.
But they also point out that it can sometimes generate a series of losing trades, which, again, reinforces the importance of risk management, not relying solely on one indicator.
Right. Always combining those indicators with a solid understanding of the market and your own risk tolerance.
Absolutely.
Okay, on to the last strategy, the RSI indicator.
Okay.
I've heard of this one.
Yeah.
But I'm not sure I fully understand it.
All right. Well, the RSI, or Relative Strength Index, is a momentum oscillator.
Okay.
It basically measures the magnitude of recent price changes to figure out if a stock or asset is overbought or oversold.
Okay.
Again, scalpers use this information within the context of the prevailing trend.
Okay, so it's not just about looking at that number.
Right.
In isolation, you have to, again, consider the overall trend.
Exactly, yeah. So, for instance, let's say you're looking at an uptrend. A scalper might wait for the RSI to dip to a certain level, say 30, which often signals an oversold condition. Then they'd watch for the RSI to bounce back above that level to confirm that upward trend is continuing and potentially enter a buy trade.
So it's like waiting for the RSI to dip its toes in oversold territory.
Yeah, exactly.
Before jumping back in on the uptrend.
Exactly. Good analogy.
Okay.
Similarly, in a downtrend, they might look for the RSI to hit a high level, like 70, which could mean it's overbought, and then wait for it to drop below that level to confirm a sell signal.
Okay, so we've gone through all 4 of these strategies.
We did it.
But I have to say, I'm still a bit skeptical about the whole simple part.
Yeah, it's
they seem misleading.
Pretty intricate and
it's not
reliant on a deep understanding of these indicators.
Simple.
What do you think?
Yeah, it's a good question.
Is this something the average person could really do?
That's the million-dollar question, isn't it?
Yeah.
Is scalping something the average person could realistically do?
Right.
And honestly, the answer is it's complicated. It's not simple yes or no.
It wouldn't be a simple yes or no.
No.
But let's dig into that a little bit.
Okay.
The article does mention some pretty serious warnings.
It does.
About the downsides and challenges of scalping.
For good reason.
Okay.
Yeah. Scalping's often portrayed as this, glamorous, get-rich-quick scheme, you know? But the reality is it's incredibly demanding.
Okay.
Both mentally and in terms of the sheer time commitment.
Yeah.
You're essentially glued to your screen.
Right.
Constantly monitoring the market for these fleeting opportunities.
So forget about checking your trades once a day or even every few hours this is. Like living and breathing the markets 24/7.
Pretty much.
Okay.
Yeah, and even if you have the time to dedicate to it, it's incredibly difficult to execute trades with the speed and precision required for scalping.
Yeah.
You're making split-second decisions.
Yeah.
Even a slight hesitation.
Or a tiny error can cost you.
Right. So not only do you have to be fast,
Right.
you have to be incredibly accurate.
Yeah, very little room for error.
Yeah.
And on top of that,
Yeah.
there's the psychological toll.
Oh,
The
right.
constant pressure.
Yeah.
The stress of making these rapid-fire decisions, it can really wear you down.
Yeah.
The article actually cites research
Oh, wow.
that suggests frequent traders, like scalpers, often lose money faster
Oh, wow.
than those who take a longer-term approach.
Really?
They get caught up in chasing trades,
Yeah.
ignoring their stop-loss discipline,
Yeah.
and end up making emotional decisions.
So it's not just about like mastering the technical side of things. You also
Yeah.
need incredible
Absolutely.
mental discipline.
Yeah.
And emotional control.
And that's something that's often overlooked.
Yeah.
Trading psychology is just as important as the technical analysis.
Yeah. Okay. So given all that, it sounds like scalping might not be the best fit for everyone.
Maybe not.
The article does hint at alternative,
Yeah.
longer-term trading approaches.
Right. Taking a step back.
What are some of the advantages there?
Well, as opposed to the high-intensity world of scalping,
Yeah.
longer-term trading allows for a much more measured, deliberate approach.
Yeah.
You have more time to analyze the markets,
Okay.
develop your trading plan, and wait for high-probability setups.
So it's less about reacting to every little price fluctuation and more about making those strategic decisions based on a broader view of the market.
Exactly. You're not constantly glued to your screen, stressing over every tick.
Right.
It's more about identifying trends, understanding the fundamentals, being patient.
That definitely sounds a lot more appealing to me, at least.
Yeah, to me too.
But I'm curious, could any of the principles behind these scalping strategies be applied to a longer-term approach?
That's a great question.
Or are they just completely different beasts?
And while the execution is obviously very different, some of the underlying principles can be surprisingly relevant.
Really?
Yeah, I think so.
Like what?
Well, take the emphasis on identifying and following the prevailing trend.
Okay.
That was a key point. That came up again and again when we were discussing those scalping strategies.
Right. Whether they were using the stochastic oscillator or moving averages or the parabolic SAR or the RSI.
Exactly.
It always came back to like aligning your trades with the overall market direction.
Exactly. And that's a principle that holds true. Yeah. No matter what your trading time frame is.
Okay.
Whether you're holding trades for minutes or hours or days or even weeks.
Yeah.
Understanding the broader market context and trading in sync with the prevailing trend is crucial.
So even though the tools and the indicators might be different, that mindset of identifying the trend and riding the wave, so to speak.
It's like you wouldn't try to swim upstream, right?
Right.
You'd want to go with the flow.
Yeah.
Ride the wave.
Okay, I like that analogy.
Right.
Now, another thing that really stood out to me was the importance of discipline and risk management in scalping.
Oh, huge.
It seemed absolutely crucial given the high volume of trades.
Absolutely.
And the need to minimize those losses.
But here's the thing.
Yeah.
Those same principles are equally crucial for longer-term traders.
Right. It's just easy to maybe get complacent when you have more time to react, but the potential for losses is just as real.
Absolutely.
Yeah. So whether you're making split-second decisions or carefully planning your entries and exits over days or weeks, sticking to your trading plan, setting those stop-loss orders, managing your risk, it's not negotiable. It's not negotiable.
Yeah.
Now, shifting gears a bit, something we haven't explicitly discussed is the psychological aspect of trading.
Right.
The article touched on the intense pressure and stress scalpers face.
For sure.
How that can lead to emotional decision-making.
Which we know. Is a recipe for disaster.
It's a recipe for disaster, letting your emotions drive your trades.
Rarely ends well.
Rarely ends well.
Yeah.
And while longer-term trading
might
seem less emotionally charged, the truth is psychological factors can still play a huge role.
Things like,
yeah, for sure.
Fear, greed, the tendency to second-guess ourselves.
Precisely. Yeah, the article's cautionary message about chasing trades and ignoring stop-loss discipline. Yeah. That applies to all traders, not just scalpers.
Right.
We can all fall prey to those psychological biases. Yeah. Especially when we're under pressure.
Totally.
Or facing a losing streak.
So how do we guard against those?
How do we make sure we're making,
That's the million-dollar question, isn't it?
It is. It really is. I mean, we've all been there, right?
Oh, yeah.
Letting our emotions get the best of us.
For sure.
Making those impulsive decisions that we later regret.
It happens.
Yeah.
So it's about developing self-awareness.
Okay.
Understanding our own psychological triggers. And cultivating the discipline to stick to our plan.
Yeah.
Even when our emotions are screaming at us to do something else.
That sounds like a lifelong journey of
it is
self-discovery and self-mastery.
It's definitely a process, not a destination.
Yeah, not exactly a quick fix.
But here's the good news.
Okay.
The more we practice, the more we learn, the better we become at managing our emotions and making those rational trading decisions.
So it's not just about mastering the technical aspects of trading.
Right.
It's about mastering ourselves,
Exactly.
our minds, our emotions.
And that's a journey that all traders, no matter their preferred style or time frame, need to embark on.
Okay. I'm really starting to see how those seemingly disparate worlds of scalping and longer-term trading might actually have more in common than I initially thought.
Yeah, more overlap than you'd think.
Yeah.
Right.
But let's get back to those specific scalping strategies we discussed earlier.
Yeah.
Are there any technical insights we could apply to a longer-term approach?
That's what's so interesting about this.
Yeah.
You can actually adapt a lot of those tools and indicators to a longer-term approach.
Really?
Yeah.
Give me an example.
Well, take the stochastic oscillator, for example.
Okay.
While scalpers use it on very short time frames to identify those quick entry and exit points,
right?
Longer-term traders can apply the same concept on daily or weekly charts.
So instead of looking for minute by minute fluctuations, you'd be using the stochastic oscillator to kind of gauge the overall momentum and potential shifts in the
bigger picture,
the larger trend.
Precisely. Yeah, it's about adjusting the lens through which you're viewing the market.
Okay, so what about moving averages?
Moving averages.
How could those be applied to a longer-term strategy?
Scalpers use them on short time frames to spot those crossovers that signal potential trading opportunities, right?
Right.
Well, longer-term traders can use them on daily or weekly charts to identify support and resistance levels.
Okay.
Or to confirm trend reversals.
So it's not just about the time frame, it's about how you're interpreting the information that the indicator's giving you.
Yeah, it's about adapting those tools to fit your own trading style and goals.
Okay.
Now, the parabolic SAR might seem a little less applicable to longer-term trading.
Right, because it's all about those quick trend.
Quick reversals.
Reversals, it would be way too sensitive on a longer...
Yeah, you're right. It wouldn't be used as a primary trading signal in that context. But observing how the parabolic SAR interacts with price action on a longer time frame can give you a sense of the trend's strength and potential volatility.
So it's more of a confirmation tool than a signal generator
in
that context.
Yep.
Okay.
And lastly, let's revisit the RSI.
Okay.
Remember, scalpers use it to identify those overbought or oversold conditions within a very short time frame.
Right.
Well, longer-term traders can use it on daily or weekly charts to gauge the overall strength or weakness of a trend.
So while scalpers are looking for those quick dips and spikes, longer-term traders would be using it to assess the sustainability of that broader trend?
Precisely. So a consistently high RSI on a daily chart, for example, might suggest that the uptrend is strong and likely to continue.
Okay.
Conversely, a consistently low RSI might indicate that the downtrend is losing steam.
Okay.
Maybe a reversal's on the horizon.
It's fascinating to see how these indicators, while primarily designed for short-term trading, can be adapted and applied to longer time frames to gain valuable insights.
It really highlights the importance of understanding the underlying principles behind these tools.
Yeah.
And how they reflect market dynamics.
Totally.
Once you grasp those concepts, you can start applying them creatively to different trading styles and time frames.
It's like learning a new language.
I love that analogy.
Once you understand the grammar and vocabulary, you can start expressing yourself.
In different ways.
In different ways.
For sure. And just like with any language, fluency comes with practice, experimentation, and a willingness to step outside your comfort zone.
Speaking of stepping outside our comfort zones,
we've
talked a lot about how aspects of scalping can be applied to longer-term trading.
Right.
But what about the reverse?
Ooh.
Could a seasoned long-term trader
actually
benefit from incorporating some of those high-speed techniques.
It seems counterintuitive, right?
Totally.
Yeah.
I mean, we've spent this whole time talking about how different they are.
Yeah.
But maybe there's something to be learned from both sides of the spectrum.
Yeah, I like that.
Yeah. Open mind.
Totally.
Yeah.
So we've been unpacking how some scalping principles could apply to longer-term trading.
Right.
But now we're flipping the script.
Okay, yeah.
Could a long-term trader learn anything from those high-speed scalpers?
Interesting question.
I have to admit, I'm finding this whole concept fascinating.
Yeah, it is a bit of a mind bender, isn't it?
Totally.
But that's what makes this deep dive so interesting, challenging assumptions.
Yeah.
Exploring new perspectives.
Exactly.
Yeah.
So where do we even begin to bridge this gap?
It's a big gap.
Yeah. What aspects of scalping could a seasoned long-term trader potentially benefit from? Well, one area where scalpers really excel is in their acute awareness of price action.
Okay.
They're trained to spot those subtle shifts and patterns that often go unnoticed by traders focused on larger time frames.
Right, because they have to be so tuned in to those minute-by-minute fluctuations.
Yeah, they live and breathe it.
But how could that possibly translate to someone who's looking at, like, daily or weekly charts?
Well, think of it this way.
Okay.
Even in those larger time frames, price action tells a story.
Okay.
It's revealing the balance between buyers and sellers.
Okay.
The strength of a trend. Those little hints of potential reversals.
Okay.
So by developing that same keen eye for price action, even on a macro level, long-term traders can fine-tune their entries and exits.
So it's not about becoming a scalper overnight. It's about honing that ability to read those subtle clues in the price action.
It's about developing your market intuition, becoming more attuned to those nuances of price movement.
Okay, I can see how that could be beneficial.
For sure.
Now, another hallmark of scalping is obviously that lightning-fast execution.
Right.
I know we can't directly apply that to longer-term trading.
Of course not.
But is there a related skill?
Yeah, I think so.
That could be useful.
Absolutely. It's not about speed itself.
Okay.
But the ability to make decisive decisions.
Okay.
When the opportunity presents itself.
Right.
Scalpers can't afford to hesitate or second-guess themselves.
Right.
They have to act decisively. Based on their analysis and their plan.
They have to, trust their gut and pull the trigger when the moment is right.
Yeah, and that same decisiveness can be incredibly valuable for a long-term trader.
Okay.
Think about it. How often do you find yourself overthinking a trade?
Oh, all the time.
Getting stuck in analysis paralysis.
Yes.
And then missing out on a potentially profitable opportunity.
Definitely guilty of that.
It happens to the best of us.
Yeah.
But cultivating that sense of decisive action, even in a slower-paced environment, can really make a difference.
So it's about finding that balance between thoughtful analysis and knowing when to act.
Exactly. And this leads us to another crucial aspect of scalping.
Okay.
That's surprisingly relevant for long-term traders.
Yeah.
Discipline and mental resilience.
We touched on this earlier.
We did.
But it's worth emphasizing.
It's so important.
Scalping is a high-pressure game.
Absolutely.
Even a tiny lapse in focus or discipline can have
huge consequences.
Major consequences.
Yes.
Right.
Scalpers have to be incredibly focused, sticking to their trading plan, managing their risk meticulously.
Yeah.
And while the emotional intensity might be dialed down in long-term trading, those principles of discipline and resilience are still paramount.
You still need to have the mental fortitude to, ride out those inevitable drawdowns, avoid chasing losses.
Stay focused on your long-term goals.
Yeah.
Exactly. Yeah, developing that mental toughness, that ability to stay calm and composed, even when the market throws you a curveball.
Right.
That's essential for success in any trading style.
It's not just about the technical side. It's about
the mindset.
Cultivating the right mindset.
It really is.
The discipline.
Yeah.
The resilience. The unwavering focus on your goals.
Couldn't have said it better myself.
Yeah.
And those are qualities that can be learned and strengthened. Through practice, self-awareness, and a commitment to always improving.
This has been such an eye-opening conversation.
Yeah, it's been great.
I came in thinking scalping and long-term trading were worlds apart.
Yeah, I know.
But I'm seeing so many unexpected connections.
That's the beauty of the deep dive, isn't it?
Totally.
We're digging beneath the surface.
Yeah.
challenging assumptions, discovering new ways to think about the markets.
Absolutely. And it highlights a really important lesson for all traders,
Yeah,
no matter their experience level.
for sure.
Be open to new ideas, challenge your assumptions, and constantly seek out ways to improve your approach to trading.
Couldn't agree more. The trading world is constantly evolving.
Yeah.
It's those who are willing to adapt, learn from different perspectives, and continuously refine their skills who are going to succeed in the long run.
Well said.
Thank you.
So whether you're a seasoned scalper, a long-term investor, or somewhere in between, never stop learning, stay curious.
Yeah.
Never be afraid to step outside your comfort zone.
Exactly. Embrace the journey, stay adaptable, and keep pushing yourself to grow as a trader.
So we've been talking about how some of those scalping principles could apply to, like, longer-term trading.
Yeah, it's been fun to explore.
But now we're really flipping the script.
Okay.
Could a long-term trader actually learn anything from those high-speed scalpers?
Interesting question.
I'm finding this whole concept.
I know, it's kind of cool, right?
Yeah, super fascinating.
Yeah, it is a bit of a mind bender.
Yeah.
But that's what I like about these deep dives.
Totally.
Challenging those assumptions, exploring new perspectives.
Totally.
Yeah.
So where do we even begin to, like, bridge this gap?
Yeah.
What aspects of scalping could a seasoned, long-term trader potentially benefit from?
Well, one area where scalpers really excel is in their acute awareness of price action.
Okay.
They're trained to spot those subtle shifts and patterns that often go unnoticed by traders focused on larger time frames.
Right.
Yeah.
Because they have to be so tuned in to those
exactly.
minute-by-minute fluctuations.
They live and breathe it.
But how could that translate to someone who's looking at, like, daily or weekly charts?
Think of it this way.
Okay.
Even on those larger time frames, price action tells a story.
Okay.
Revealing the balance between buyers and sellers, the strength of a trend, those little hints of potential reversals.
Okay.
So by developing that same keen eye for price action, even on a macro level, a long-term trader can fine-tune their entries and exits.
So it's not about becoming a scalper overnight.
No, not at all.
It's about honing that ability to really
exactly.
read those subtle clues in the price action regardless of what time frame you're trading on.
Yeah, developing that market intuition, becoming more attuned to those nuances of price movement.
Okay. Yeah, I see how that could be.
It can be really valuable.
Beneficial. Okay.
Yeah.
Now, another hallmark of scalping is obviously that lightning-fast execution.
Of course, yeah.
I know we can't apply that directly to longer-term trading.
You can't just be, like, super fast with everything.
Right, exactly. But is there a related skill that could be useful?
Absolutely.
Okay.
It's not about speed itself, but the ability to make decisive decisions when the opportunity presents itself.
Okay.
Scalpers can't afford to hesitate or second-guess themselves. They have to act decisively based on their analysis and their plan.
So they have to, like, trust their gut and pull the trigger.
Exactly.
When the moment is right.
And that same decisiveness can be incredibly valuable for a long-term trader.
Okay.
Think about it. How often do you find yourself overthinking a trade? Getting stuck in analysis paralysis?
Oh, all the time.
And then missing out on a potentially profitable opportunity.
Oh, yeah.
It happens to the best of us.
Definitely guilty of that.
Yeah.
Yeah.
But cultivating that sense of decisive action, even in a slower-paced environment, can really make a difference.
It's about finding that balance between, like,
Right.
thoughtful analysis and knowing when to act.
Exactly. And this leads us to another crucial aspect of scalping.
Okay.
That's surprisingly relevant for long-term traders.
Okay.
Discipline and mental resilience.
We touched on this earlier.
Yeah, but it's worth emphasizing.
It's so important.
Yeah, it really is.
Scalping is such a high-pressure game.
Oh, absolutely.
Even a tiny lapse in focus or discipline can have
huge consequences, yeah.
Major consequences.
Scalpers have to be incredibly focused, sticking to their trading plan, managing their risk meticulously.
Yeah.
And while the emotional intensity might be dialed down in long-term trading, those principles of discipline and resilience are still paramount.
You still have to have the mental fortitude to ride out those
absolutely.
inevitable drawdowns, avoid chasing losses, and stay focused on long-term goals.
Exactly, yeah. Developing that mental toughness, that ability to stay calm and composed, even when the market throws you a curveball, that's essential for success in any trading style.
It's not just about the technical side. It's about
the mindset.
Cultivating the right mindset.
It really is, yeah.
The discipline, the resilience, that unwavering focus on your goals.
Couldn't have said it better myself. And those are qualities that can be learned and strengthened through practice, self-awareness, and a commitment to always improving.
This has been such an eye-opening conversation.
It has, hasn't it?
I came in thinking scalping and long-term trading were worlds apart.
I know, right? Totally different planets.
But I'm seeing so many unexpected connections.
I think that's the beauty of the deep dive.
Yeah.
Right? We dig beneath the surface, challenge our assumptions, discover new ways to think about the markets.
Totally. And it highlights such an important lesson for all traders.
Yeah.
No matter their experience level.
For sure.
Be open to new ideas, challenge your assumptions, constantly seek out ways to improve your approach to trading.
I couldn't agree more. The trading world is constantly evolving, and it's those who are willing to adapt, learn from different perspectives, continuously refine their skills who are going to succeed in the long run.
Well said.
Thank you.
So whether you're a seasoned scalper, a long-term investor, or somewhere in between.
Right. Wherever you fall on the spectrum.
Never stop learning, stay curious, and never be afraid to step outside your comfort zone.
Exactly. Embrace the journey, stay adaptable, and keep pushing yourself to grow as a trader.
That is a fantastic note to end on.
Yeah, this was fun.
Thank you for joining us on this deep dive into the world of scalping and its surprising connections to the world of long-term trading.
My pleasure.
We hope you've gained some valuable insights and maybe even a new perspective on your own trading journey.
I hope so.
Until next time, happy trading.